Hello from Trend Signal with a review of the data and events for the week starting the 16th of December. A week following up on from last week where equities had a pretty poor week really. Non-farm payroll the previous Friday looked positive. The markets reacted quite well, but then I think last week we spent most of the time slipping, certainly on the back of the notion that partly on the notion that the agreement between the Republicans and Democrats over the budget deficits and the borrowing limits, etc., seemed to herald the idea that the Fed would have more latitude to taper. But I don't think it's as clear as that, and there is still a question mark over the employment data. Nevertheless, there are other things going on this week, but the focus of attention will be on the FOMC meeting starting tomorrow, culminating on an announcement on Wednesday evening. I would say it's probably 50-50 or more likely, I suspect, that they'll delay any start to the tapering of QE until January. But time will tell. That's just one person's view. Other than that, markets, well, the dollar remained quite steady against emerging market currencies, the yen and the Aussie, but persistently weak against the euro due to the taper talk, really. Cable is short on the dailies with euro showing signs of topping, although nothing has been signalled yet. Gold had a volatile week as the commodity markets wrestle with a stronger US dollar and taper talk, whilst Brent crude, that is a pretty sharp fall, falling just under $3 in fact, bringing an end to that rally from the beginning of November. So I just want to look at the overnight news where we're heading this morning. Poor manufacturing data from China, positive manufacturing data out of certainly Germany. France continues to underperform. The French flash manufacturing PMI at 47.1, considerably weaker than the 49.1 expected, whilst Germany on the opposite side of the equation really outperforming, beating its forecast of 53.1, coming in at 54.2. So a mixed bag today, but markets have reacted very positively. Possibly because they got a little bit oversold. Seasonally, this is not a good time to be shorting stocks. 23 out of the last 25 years, the markets have performed pretty well around this period. And I think it's only because we had this sharp run-up in the DAX, Dow, S&P, that we've seen this reaction. FTSE sort of training a little bit today, but as I say, all eyes will be focusing on the Fed on Wednesday. Up until then, though, there is quite a bit of data coming out. We've got our inflation data tomorrow in the UK. The data is expected 2.2, so same as last month, but I've got a feeling that it might be slightly stronger than that. So certainly stronger or higher than 2.2, but not a problem to worry about. And then we have the first of two surveys with the German ZEW economic sentiment index. That's published tomorrow at 10 o'clock. That is an important data. Then we have the CPI data in the States. Very benign inflation outlook there, plus 0.1% is the core CPI data, excluding the more volatile elements. Mark Carney from the Bank of England talking in the afternoon on Tuesday. That'll be something to make a note about as well. And then Wednesday, unemployment data in the States, claimant count change referred to here from Forex Factory. Definitely something that you should focus on. And then the next sort of important data on Wednesday is probably the housing permits. This all pales into insignificance, really, when we think about what's actually happening after the market shut, certainly the European market shut, when the Fed makes its announcement on its deliberations over quantitative easing. Clipping, tapering, reducing, slowing, whatever you want to call it. At some stage, the Fed have to start this whole process. Expectations are mixed, really, on this. Safe to say that, in a way, the uncertainty would be lifted if they did start this month, but there is a question mark over the employment data from the previous month, so it's possible they will be on hold. We shall see. Thursday, we'll all know by then, we have regular unemployment claims in the US and existing home sales, but before that we've got our retail sales data here in the UK, a pickup from the minus 0.7% from the previous month, plus 0.3% is what's expected. Sterling remains quite steady on the crosses. looking a little bit toppy against the dollar, as indeed the euro is. Sterling having topped out sooner than the euro. As I said, all will change possibly on Wednesday night. We then have the second of our manufacturing numbers from the Philadelphia Federal District, so that comes out at 3 o'clock. Quite an important number, that really, certainly ticking up from the 6.5 of the previous month. Really, current account data on Friday completes the data from the UK, and then in the afternoon, nothing too much. We've got final GDP data in the US, and that's pretty much it. If you're in the CAD, we've got CPI data again as well, out at 1:30. That's it for the week. Good luck for the remaining 3 days. We're actually meeting again on Wednesday at 8 o'clock. So we still will not have knowledge of the Fed's decision on tapering, but we can be discussing implications more at that time. Thanks very much for listening. Good luck. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.